SoundHound AI stock and BigBear.ai stock are moving in opposite directions so far in 2025. BigBear.ai stock is soaring and SoundHound AI stock is crashing, especially after today's news that Nvidia divested its stake in SoundHound AI stock. But for longer term investors, which one is the better AI stock to buy, SoundHound or BigBear? I'll answer that question in this video, comparing these two AI stocks on several financial metrics, including revenue, operating profit, and cash flow from operations. I'll also share with you my discounted cash flow valuations of SoundHound and BigBear to show you the intrinsic value per share I've calculated for each of these two AI stocks. I'll also look at the forward price to sales ratio as another method for comparing valuation to come to the conclusion on which one of these two is the better buy today. So let's get into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Measuring these two on trailing 12-month revenue gives us a mixed picture. First of all, BigBear.ai generates more revenue on a trailing 12-month basis at $155 million compared to SoundHound. However, SoundHound demonstrates better growth compared to BigBear at $67 million, but that growth trend is much better than BigBear. Also, SoundHound is not growing organically. It's made several acquisitions that's helping facilitate the growth. So it's not like SoundHound AI is growing because its core services are growing faster than BigBear.ai's core services. Part of SoundHound AI's growth is coming through acquisition, which is inorganic growth. It's not as valuable as organic growth, in my opinion. The next metric I wanted to compare these two on is their operating profit margins. And these two are losing money on the bottom line. And BigBear.ai is not really improving in that regard. Negative 29% operating profit margin. SoundHound, much worse, negative 140%. But the trend line was improving, although the progress has stopped for SoundHound AI's improvements in operating margin, and it's negative 140%. Management did say that once it has time to digest its acquisitions, that the margins should return to improving, but that remains to be seen. For now, they're losing significant sums of money on the bottom line. And it's a similar story when I compared these two on cash flow from operations to sales. BigBear.ai at negative 15%, not demonstrating that much improvement, but it's way better than SoundHound AI at negative 133%. SoundHound AI's improvement has also stalled in this regard as well. Again, management alluding to the acquisitions, and once they complete the digesting the acquisitions, finding synergies, finding areas where there's overlap and letting go of some of the people, that should improve their cash flows according to SoundHound's management team. Now, when I'm looking at companies that are losing so much money, I like to see how much long-term debt they have. And BigBear.ai has total long-term debt of $195 million compared to SoundHound with total long-term debt of $39.69 million. But remember, BigBear also generates more revenue compared to SoundHound, and it has better cash flow operations compared to SoundHound. So it can manage more debt than SoundHound can manage, comparatively speaking. Still, they are both concerning with regards to how much money they're losing on the bottom line and if they can service their debt sums. So now that we looked at the financial metrics, let's look at the valuations. For BigBear.ai, when I conducted my discounted cash flow model for this company on February 8th, I found the intrinsic value per share to be $5.23, and that compares unfavorably to the current market price of $9.02. According to my DCF calculation, BigBear.ai stock is overvalued, and I forecast robust growth in the company's free cash flows, turning positive in 2027 and rising from that point onward. The one thing that brings down the valuation the most is the company's risk profile. It has a beta of 3.18, and given the risky nature of the business and the stock, I don't feel that it deserves a downward adjustment on the beta just yet. If it grows more, adds more contracts, adds more sustainable cash flow, becomes closer to positive free cash flow, I can see the company's beta falling. But you can see here, according to Wall Street Analyst, they forecast the company's free cash flow will be negative in 2025, 2026, before becoming break even in 2027. If it does achieve break even cash flow in 2027, you can expect the beta of the business to decline considerably, because that's one big risk that will be removed from the business. Now, when I calculated the discounted cash flow for SoundHound AI, it was similar in that the analysts on Wall Street that are evaluating SoundHound AI, they expect the company will be negative in free cash flow in 2025, but turn positive in 2026 and increase from there forward. The intrinsic value per share I calculated for SoundHound was $3.88. And again, that compares unfavorably to the current market price of $10.67. Similar to BigBear.ai, SoundHound AI has a large beta of 3.04. And for the same reasons as BigBear.ai, the riskiness of the business, the negative cash flows, I expect the beta to remain elevated until the company demonstrates closer proximity to positive free cash flow, which looks like it, according to Wall Street analysts, will not happen until 2026. And just like Big Bear, if it does achieve this positive free cash flow, you can expect the company's beta to decrease, the volatility to decrease, and all else being equal, lower risk is a better value for long-term investors. I also measured their valuations and compared them on a forward price to sales basis. And according to this metric, BigBear.ai is trading at a forward price to sales of 6.2, and SoundHound AI is trading at a forward price to sales of 21. So according to this metric, SoundHound is more than 3 times as expensive as Big Bear. And then when we looked at the discounted cash flow models, the difference between the market price and intrinsic value was worse for SoundHound compared to Big Bear. So in conclusion, what I will say about these two AI stocks is I would not want to own either one. They both seem overvalued to me. However, if you forced me to pick one of these two AI stocks today, I would pick Big Bear AI as the better AI stock, but they're close and I don't see very much improvement of one over the other. But if I had to pick one, it would be Big Bear AI. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.